Borrowing capacities are a lot lower, prices are a lot higher, a lot fewer homes are affordable than was true recently.
One thing that stings people more than probably anything else when they buy a home is stamp duty.
Most of the customers who are first home buyers, they don't need to put the 20% deposit.
First home buyers are facing extremely challenging conditions, from saving for a deposit to sustained high interest rates and mortgage serviceability being at its worst level in 3 decades. But that doesn't actually mean that it's impossible to get into the market. Here with me to chat through the 2025 PropTrack and CommBank First Home Buyer Report is Angus Moore, Executive Manager of Economics at REA Group, and Marcos Meneguzzi, Executive General Manager of Home Buying at CBA. Thank you both so much for coming on the show. I want to get straight into it because it really is an interesting landscape in the world of a first home buyer. Angus, can you give us a brief rundown of the main issues that the report identified for this buyer group?
When we think about first home buyers, there's kind of 2 hurdles for getting into the market that we think about. So the first is affordability or maybe serviceability. And this is really about, can you pay your mortgage on the home that you want to buy? And so this is a function of how expensive the home is that you want to buy and therefore how much you're borrowing, but also critically of interest rates and of your income at very challenging levels at the moment, in part because interest rates have risen very, very quickly in recent years. The second hurdle that first home buyers face, and certainly one that gets a lot of attention and a lot of focus, is the deposit. Saving up that canonically 20% deposit in order to take out the mortgage to begin with. So where affordability is about, can you pay the mortgage? This is about, can you get the mortgage to begin with? And unlike affordability, which is affected by interest rates and the price of the home, the deposit hurdle is really just how expensive is the home you want to have, and critically, how much wealth do you have? This is obviously a big challenge for first-time buyers because they tend to be younger, so they haven't had as long to save up that wealth.
Let's drill down on that deposit hurdle side of things. Angus, what is the data showing in this space? How long is it taking a first-home buyer to save that average 20% deposit?
Yeah, so the way that we think about this usually is, how long would it take you to save up a 20% deposit on a median-priced home if you're an average income household saving 20% of your income? It's obviously very contrived. No one does exactly that, but it kind of gives you a sense of how big the deposit burden is and how it's changed over time. So at the moment, nationally, it takes about 6 years, a little bit under, to save that deposit, which is about bit over twice what it was back in the sort of 1980s. Obviously, some states it's longer. New South Wales is longer, nearly 7 years. South Australia, perhaps interestingly, is even longer than New South Wales at the moment, which reflects how much prices have gone up there. Some states like Victoria are a bit lower, but on average, 6 years across the country.
Marcos, from a lender's point of view, are those 20% deposits even still necessary?
When it comes to buying a home, you don't necessarily need the 20% deposit. Actually, when we look at the data at CommBank, the average LVR for the first home buyer is 85%, which means on average, customers are coming with 15% deposit. So most of the customers who are first home buyers, they don't need to put the 20% deposit.
All right, so if this 20% deposit seems a little bit outdated, Marcos, how can first home buyers get into the market with a lower deposit?
I might maybe recall some RBA data that suggests that 3 in 4 of the home buyers today, they actually buy their first home with less than 20%. Today, there's quite a few options for customers that don't have the 20% deposit for them to actually be able to buy a home. These include government grants and schemes, lenders' mortgages, insurance, and guarantor loans, all of which actually would require much less than 20% deposit. Within guarantor loans, for example, at CommBank, one interesting product that we have is called the Property Share, which allows kind of a relatives or friends to buy a home where they're actually sharing the deposit, but they keep their financials separate. If you think about the government scheme, there's, probably the largest one. It was called the Government Guarantee Scheme. It's actually changing its name now. It's going to be called the Australian Government 5% Deposit Guarantee. So it's not just a changing name. The program is expanding. So there used to be caps on the price of the properties that would be eligible for. Those caps are increasing, which means, a greater number of homes are now actually eligible for the program. There's also used to be income caps into the program. So there will be no longer income caps, which means more customers can qualify for that program. So that can be like a good benefit for customers who are looking to enter into the market.
Angus, can you just talk us through the Australian government 5% deposit scheme?
What this allows you to do as a first home buyer is buy with a 5% deposit, and the government will guarantee the other 15% of the deposit. This scheme used to have income caps as well as a cap on the number of places for the scheme. But as of 1 October, those caps have been removed. So all first home buyers can take advantage of this. There are still price caps. So the home you buy has to be under a certain price threshold, which depends on where you're buying. But these price caps are fairly high and so probably won't matter for most first home buyers. To kind of put some numbers around it, in Sydney, it's 1.5 million. In Melbourne, it's 950,000. So it covers about 2/3, 60% of homes in those cities. So, for most first home buyers who are going to be looking at the more affordable end of the market, that won't be an issue.
All of these schemes are pretty handy, but what types of homes are available on the market for a couple who, say, has a typical income?
We've spoken a lot about the deposit thus far, and that is obviously a big constraint for many first home buyers because they tend to be younger, they haven't saved up the wealth. But the other big constraint is once you actually have the mortgage, can you pay it? Can you service it? And how much can you borrow? And therefore, what can you afford to buy? At the moment, with interest rates at quite high levels, they've come down a bit, but they're still very high, particularly compared to a few years ago. Borrowing capacities are a lot lower, prices are a lot higher. A lot fewer homes are affordable than was true recently. A typical income first home buyer household at the moment, so think 25 to 39, renting, typical income for that sort of a household is in the order of just under $130,000 a year. They can afford about 15% of homes that were sold in the past year. So pretty low. And in fact, the lowest we've seen on our data. I don't want to leave this, entirely dour though, that things are starting to improve. Rates have come down. The numbers I'm having here don't fully capture the effect of rate cuts that we've seen thus far because some of them have happened quite recently and we're talking about what we've seen over the past year. And of course, we are expecting more rate cuts. So this picture is going to improve, but at the moment, things are quite challenging.
Marcos, one thing that stings people probably more than anything else when they're buying a property, and especially for a first home buyer, is stamp duty. Can you talk us through what the report says about this?
When it comes to stamp duty, it's not necessarily, but can be a surprise to some customers, particularly first home buyers. They will be going through the process for the first time. And it's also stamp duty can be quite a material cost to customers, right? If you take, for example, New South Wales and a home that's a little bit over $1 million, stamp duty can amount to almost or around $40,000. And if you had to compare those $40,000 with actually the monthly payment on that mortgage, you might be talking up to 9 or even 9 times perhaps that amount. So it can be quite a material amount of money that you need to save for buying that home. At CommBank, we know that navigating those costs is quite important. Not only stamp duty, but there are other costs that are involved into purchase. For example, legal costs, or even you might be thinking about you want to insure your home, so you got to be thinking about the cost of insuring your home. So that's why we really suggest that our customers speak to a home lender specialist right at the beginning of the process to really understand the full scope of what they're trying to do. Now, on the other side, the very good news on that is that most states, they offer concessions on stamp duties or even actually full exemptions from it. So there's actually opportunities for customers as well in that space.
Marcos, those stamp duty concessions, are they available on all homes?
Yeah, stamp duty concessions are an effective way for first home buyers to enter the market. However, it's important to know that those concessions, they actually might phase out as prices go up. So it's actually quite important for customers to consider that very early in the journey of buying a home because they might consider trade-offs. For example, living in a smaller home in a more expensive area or moving to a larger home in the suburbs or even considering units instead of homes because units, we know it tends to be kind of priced lower.
Where did the report identify as some affordable areas for first home buyers?
The areas that are really popular for first home buyers that are searching tend to be the more affordable areas. So this is, if we're looking at Sydney, places like Parramatta, Mount Druitt in the southwest. For Melbourne, it's the southeast and west, places like Dandenong. And for Brisbane, again, it tends to be the more affordable parts. So, Logan, Ipswich and the like.
Okay, so what are they buying in these areas then? What types of homes?
I mean, obviously all sorts of homes, every first home buyer is different. But one thing we do see is first home buyers do tend towards those more affordable homes. As Marcos was saying, we do see that first home buyers engage with apartments and semi-detached, so I think townhouses and duplexes more than repeat buyers, so those looking to upgrade.
Okay, well, something that came up in the report as an affordable way for first home buyers to get into the market was a term that's gaining more and more traction, and it's rent vesting. Angus, talk us through what this is.
It's a very popular term, certainly, rent vesting. The idea of rent vesting is that you buy a home that you rent out and then you rent yourself somewhere else. So, sort of canonically, you might be living in Sydney and buy a rental property in Melbourne or in Newcastle, where it's a little bit more affordable. So you can get in at that more affordable price point. It's not the only reason to do it, but that is, one reason that people might look to do it. It's not super common at the moment. If we look at the data, the share of first home buyers taking out loans as investment loans rather than to live in the property as owner-occupiers, it's been sort of stable around about 6% over the past few years. So it's certainly there, but it's not a big share of first home buyer activity. It is a little bit more common in New South Wales than in somewhere like Victoria, which is consistent with the fact that Victoria is a bit more affordable, New South Wales less so, and so perhaps rent investing is a bit more attractive to people living in Sydney than in, say, Melbourne.
Okay, so we've discussed a few ways that first home buyers can get into the market sooner, but I really want to look ahead to the future. Angus, what is the rest of the year and beyond looking like for this group? How confident are you, I guess, that conditions will improve?
We've obviously spoken a lot about the challenges that first home buyers are facing, but I don't want to, leave a sour taste on the podcast. Things are getting better. We've already seen 3 rate cuts. That is starting to boost borrowing capacities. That is making more homes available for first home buyers. We're going to see more. How many more is obviously up for debate and always a topic of great speculation. At the moment, it looks like probably 2 more cuts by the middle of next year, though, that could be a bit less depending on where inflation lands. We'll get more data on that in late October. But that's all going to help boost borrowing capacities for first home buyers. The other good news for first home buyers, we are seeing wage growth. That obviously helps improve how much you can borrow because you have more income to service the mortgage. And while prices are growing around the country at the moment, they're not growing at the sort of pace that we had been seeing in recent years, particularly in places like Perth and Brisbane and Adelaide where prices have been on a tear. So while prices are still going up, they're not kind of getting away from people in the way that they had been.
So before we wrap up, I do have one final question for you, Marcos. If there's a first home buyer out there who's actively looking for their first property, what is your one piece of advice that you really think they should know?
It's important for first home buyers to consider the different options and for the CommBank lender specialist to work with a customer to understand which options are most relevant or most suitable to those specific circumstances of the first home buyer. Even considerations around where to buy a home, if that's actually one of the options, are quite important decisions that need to be made.
The first home buyer market is very much an evolving space, and there's so many external factors kind of informing how it looks. I really appreciate both of you coming on and providing insights into how this group can actually make home ownership their reality. So thanks again.
Thanks for having me, Alice. Always a pleasure.
Thank you.
Thanks for joining me. This has been Real Talk. For your weekly fix, please follow wherever you listen to your podcasts and tune in next time for more real questions, news and insights on the topics that matter most from realestate.com.au, Australia's #1 address in property. All information provided is general information and opinion based on current market conditions. These opinions should not be treated as investment advice. Always obtain advice based on your individual circumstances.
Real Talk acknowledges the traditional custodians of country throughout Australia and their connections to land, sea, air and community. We pay our respects to elders past and present.